Good morning and thanks so much for joining in. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Let's start with the headlines. Prime Minister Narendra Modi kicks off the poll campaign, says the BJP will get 370 and NDA 400 seats in the upcoming Lok Sabha elections. US markets end the day in the red on Fed's hawkish commentary. 10-year yield climbs to near 4.14% mark as Treasuries see their biggest two-day loss in months. Paytm cannot sell its wallets business as it has already surrendered the license. That's an NDTV Profit exclusive. Hyundai is planning to come out with a 25,000 crore IPO later this year, and that's a PTI report. And all early rises in the Asia-Pacific region open in the red. Australia's ASX 200 falls nearly 1% ahead of its rate decision. Now, equity markets in the US fell as the hawkish Fed commentary, or rather officials of the Fed and their commentary, dented rate cut expectations in March. The Dow dropped about 0.7% and the S&P 500 and Nasdaq lost about 0.3 and 0.2% respectively. And overnight, of course, the latest data showed that the Institute for Supply Management Service gauge hit a 4-month high while prices picked up. That's based on a Bloomberg report. That pushed Treasuries to their biggest two-day loss in recent months. The yield on the 10-year climbed to trade near the 4.14% mark. In the Asian markets, it's also broadly risk-off sentiment that's pervading. All of the three early risers started in the red. And in fact, you have Shanghai that is under just a tad bit of pressure as well. Hang Seng, though, is trading in the green. Of course, Shanghai is going to be in focus as China is tightening trading restrictions on domestic institutional investors, as well as some offshore units, as authorities fight to stem the rout in stocks that has now gone on for more than a year. Now, back home, with the budget out of the way, attention is now turning to the general election that's now just a few months away. The interim budget was lauded for its pragmatism, and part of that was attributed to the confidence of the Modi government of its prospects in the upcoming elections. Now, Prime Minister Modi has spelled it out even more clearly. The Prime Minister was speaking at, or rather in Parliament during a discussion on the motion of thanks to the President's address. Listen in.
देश का मिजाज एनडीए को तो 400 पार करवा ही के रहेगा, लेकिन भारतीय जनता पार्टी को 370 सीट अवश्य देगा। बीजेपी को 370 सीट और एनडीए को 400 पार। मैंने लाल किले से कहा था और राम मंदिर प्राण प्रतिष्ठा के समय भी मैंने उसको दोहराया था। मैंने कहा था, देश को अगले 1000 वर्षों तक समृद्ध और सिद्धि के शिखर पर देखना चाहिए। तीसरा कार्यकाल अगले 1000 वर्षों के लिए एक मजबूत नींव रखने का कार्यकाल है।
Right, turning to the equity markets here in India and focusing on the latest cues from the F&O space. Agam is here to break them down for you. Agam, it's been chop and churn.
Yeah.
I keep saying that. I mean, but that is the case. We saw life highs on Friday and then yesterday just coming off a tad bit. What do we see from the latest cues?
So, Alex, it's going to be a bit hard for the benchmarks to move beyond life highs. At least that is what the indication is being given to us by the data, and especially when it comes to traders. For now, of course, yesterday we did see a little more weakness come in after the considerably choppy session on Friday. Yesterday was a tad quieter, but we did see a little bit of a decline as far as the benchmarks go. So about 0.4% decline for the Nifty, but no change in OI. And the Bank Nifty, once again, that's where we saw another 0.25%, a little over that that third actually coming off, and about 2% unwinding coming through. So at the moment we are looking at uncertainty as far as traders are concerned in terms of index futures. Moving on to how things are panning out as far as your option markets are concerned. Unwinding has come through not only in the futures but in options as well, indicated by a significant amount of decline bars that you see in this particular chart. Not only in calls but in puts as well. Where does that leave us when it comes to your range, at least based on OI? For now, it seems like 22,000, and as I was suggesting earlier, is going to be a stiff resistance for the Nifty to take out in the near term. And of course, on the lower end, we're keeping an eye on the 21,500 mark because we continue to see the Nifty move within that 500-point range. Today is the Fin Nifty expiry, of course, so we will be watching out for a whole host of these financial names. Remember that HDFC Bank, along with the IndusInd Bank, once again will be in focus today, which is why they could have a bearing on your Fin Nifty because they're both part of that particular index. Let's move on and talk about stocks then and how things have come through. Yesterday, we did see shorts in Zydus Life, UPL and Aurobindo Pharma, and longs in Ipca Lab and IOC. The pharma sector, of course, has been buzzing off late, and a short covering for Metropolis, SAIL, BPCL and Petronet LNG, and longs unwinding in Hindustan Copper. But Alex, today it once again will be about the Fin Nifty expiry, specifically the HDFC Bank, getting an RBI approval to increase the stake by as much as 9.5% in IndusInd Bank.
Yes, interesting. Very interesting update then. Of course, also what you pointed out on IOC and the other OMCs, they've been buzzing and how. So we'll be talking about that also before the start of trade. So you should watch out for that. Let's shift attention to the earnings space. And we saw telecom operator Bharti Airtel coming out with its third quarter numbers. The company's net profit jumped as much as 37% and margins contracted marginally. We've got Smriti here to break down the numbers for you. Smriti, morning. What are the key details that stood out to you?
Well, you rightly mentioned that margin was pretty much flat actually, and most of the estimates, most of the results met the estimates except ARPU. ARPU rose to 208 as compared to 203 in the previous quarter. That's a jump of about 2.5%. The expectation was around 205 rupees. So that's kind of where ARPU beat estimates. Otherwise, rest of it, if you look at revenue, that grew about 2% to 37,899, EBITDA up about 1.5% to 19,815 crore, and net profit, as you mentioned, jumped 37% to 2,876 crore. Now, there was one exceptional loss that was of 130 crore. That was a forex loss, which was on account of devaluation in Nigerian naira and Malawian kwacha that impacted the profits. But overall, if you look at it, margins remain capped due to 5G capex that we are seeing this trend in last couple of quarters. But 5G capex is expected to moderate from the next fiscal, so that might have a positive impact on the profits. Now, if you look at the mobile revenue, that grew about 11.8% year on year. Total customer base also grew to 55 crore across 16 countries. If you look at brokerage notes, Citi came out with its note. It reiterated the buy on Bharti Airtel stock with a price target of about 1270, which is about 14% up from the last day's closing. They say they have been their solid execution and effective premiumization that is kind of contributing to their growth. They expect a 15% 4G tariff hike in the mid of this year itself. So that is definitely going to be a big boost for Bharti Airtel. They see the valuations at 9x of 1 year forward EV by EBITDA at premium, but still they see there's a considerable amount of upside here as well.
All right. Thanks so much, Smriti, for breaking that down for us. Of course, shares of Bharti Airtel were under pressure in yesterday's session, down over 3%. Let's talk about US-based asset management firm Vanguard and the fact that it has cut Ola's valuation to $1.88 billion from the earlier value of $3.5 billion. Vanguard, which holds less than 1% of ANI Technologies, which is the parent of Ola, has downmarked the company for a third consecutive time. But remember, these markdowns have only been made in the internal books of Vanguard. Now, we have to slip into a very quick break. We've got more stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Let's focus in on a few of the stocks that you should watch out for in trade today. Of course, there's a lot of earnings to dissect, but there's a lot of news items also based on clarifications and notifications set to the stock exchanges. Anushi is joining in to give you her list of stocks. Morning, Anushi. What do you have for us?
Morning, Alex. So I'll start off with 197 Communication, that is Paytm, which has been in news for quite some days now. This is after the RBI cracked out. But more than that, there was new news in this where it has denied reports of violation for its foreign exchange rules, saying that there's any investigation by the enforcement or on ICL, and reiterating that there has been no investigation for its Paytm Payments Bank. Again, the stock has been down by about 42% in just the last 5 days itself. More to this, even Jio Financial Services added that they have denied reports on acquiring the Paytm wallet business. So that is on the 197. Now moving on to Inox India. So Inox India and Adani Total Gas have formed a partnership wherein they will be providing an LNG infrastructure for the businesses. Now again, both the companies have been picked out as a preferred partners, and with this, Adani Total Gas would be able to reduce the overall carbon emissions by about 30% in the ongoing phased manner. That is what the press release stated. Next on the list is Indian Energy Exchange, which came out with its monthly business update, wherein it has seen about a 26% uptick in its total volumes at about 10,893 million units. So just to give a segment-wise bifurcation, over here, the conventional power segment stood at about 9,137 million units, followed by the green market, which has about 236 million units, and the renewable energy, which showed about a 1,520 million units. And last on the list is SP Apparels, which has made about a 100% acquisition in Young Brand Apparel. This is a subsidiary company of the Bandari Amani Spills Limited, and this consideration for a rupees 223 crore. Again, with this, the business adds plans to raise about additional revenue of about 400 crores. So do note that in FY23, SP Apparel had about 1,000 crore of revenue as of FY23. So that's all for the stocks that you should be watching out for today.
All right. Thanks so much, Anushi, for breaking that down. Of course, what you're seeing flashing at the bottom of your screen is quite a significant number. It is based on the latest data that we've picked up that talks about FPI activity, or foreign institutional investor activity in the Indian equity markets in the second fortnight of the last month. And remember, that fortnight was characterized by heavy selling in a few financial names, and particularly you had HDFC Bank. So while the overall FII number for the month was in the red, that is net selling, a large part of that has come in apparently in the financial services space. Over 30,000, or in fact over 31,000 crore being sold in financial services stocks itself in just the second half of the last month. We'll of course get you more insights over the course of the day, but that's something that you should bear in mind. Of course, in yesterday's session, you had foreign institutional investors that turned net buyer once again to the tune of about 520 crore rupees. Let's talk about Ashok Leyland then, and we've got earnings to take care of, or to pay attention to, because this particular quarter was quite a quarter for Ashok Leyland with a substantial expansion in margins. We've got Vinay joining in to explain why that has taken place. Vinay, morning, what can you tell us?
Morning, Alex. So the profit rose 60%, and as you said, it was on sharp improvement in margins, and this is in line with the company's long-term goal of improving its profitability, because the company thinks, and rather the industry thinks, that they need to have higher profitability to invest in the future technologies that are coming up, and there are limited players in the space. So that's what the thinking is, and that's where they are working on. So if you see that sales fell 0.7% year on year to 47,241 units. So the sales fell, even then the profits rose 60%, and that was entirely due to improvement in the margins. And the lower sales are also reflected in the revenues, which rose just 3% or higher selling prices. So margin expanded 320 basis points, and it was largely led by lower commodity costs. If you can remember, the last year was very difficult for the automobile companies, as commodity costs ran a little higher, and now the stabilizing effect is really clear on the margins of all the automobile companies. So if you look at the commodity costs, the material cost as a percentage of sales fell to 70.7% as compared to 79.8% last year. So this reflects how good has this quarter been for the companies, if you look at the perspective from the commodity costs. As I said, this reflects companies' long-term pursuit of higher profitability. And in an interaction on Bharat Mobility Expo, the company CEO also told me that they are ready to sacrifice the market share if they can get higher profitability. So this reflects what is happening on the ground.
All right. In fact, that is quite the insight. Thanks so much, Vinay, for sharing that with us. Let's talk about a few more earnings that came out yesterday, and we've got Varsha joining in to tell you about a few stocks here. Varsha, what are the stocks on your list today? Morning.
Good morning, Alex. So let's start with Prince Pipes, wherein if you see, profit has missed estimates. The revenue was down 12%, while there was uptick in EBITDA by 238 basis points, that is at 12% versus 9% last year. Now, if you see, Q3 volume was muted. Now, this is on the base of on the back of high base effect of Q3 FY23, and company has proposed to increase the capex from 150 crore to 220 crore. Then we have Suven Pharmaceuticals, where company has reported weak set of numbers. Now, if you see, the reasons for these weak results is industry-wide inventory destocking in specialty chemicals, and also impact of COVID molecule in CDMO. Company made one-time adjustment of inventory provision of 13 crore. So if you see the EBITDA of 65 crore, the current EBITDA, if we adjust this inventory, then EBITDA would have been almost 75 to 78 crore. Then if you see, now the next few quarters, company is expecting to be soft basis the inventory destocking in specialty chemicals and CDMO effect. Then we have Tata Chemicals, where again company posted weak set of results, profit missed estimates. Now this is on the back of the impact of revenues on the back of lower volume in soda ash and pricing pressure. Also EBITDA was impacted due to lower volume and pricing pressure across the regions. And if you see, the company has reduced its gross debt to rupees 5,912 crore. Also US volume was impacted due to plant shutdown and rail car shortage. And the Rallis, which is a subsidiary company of Tata Chemicals, domestically reported good numbers, but their international business seems to be challenging. And then lastly, we have responsive industries where there was flat revenue due to holiday season, and also EBITDA growth was led by market expansion, product diversification, and they've added new distributors and direct customers, which should help to achieve robust sales in next 6 to 8 quarters, which will help company to achieve 30 to 35% of sales growth in next few years.
All right, thanks so much, Varsha, for bringing us those details. Let's stick with earnings then. We've got Avanti Feeds as well as Gulf Oil Lubricants and Fusion Microfinance to look at closely. And we've got Harsh to tell you about the key details there. Morning, Harsh. What are you picking up?
Well, absolutely, Alex. Let's look at the numbers broadly, how they stack up. Avanti Feeds, the revenue was up around 14% on a year-on-year basis, but EBITDA expanded by 20% year-over-year. Therefore, consolidating on that margin number of 7.3%, the margins have now come in at 7.7%, and profit is up 18% year-over-year. So a healthy growth coming in there. That one will be in focus. Of course, on the back of the budget as well, we had fishery stocks which were in focus, and Avanti Feeds is one of those. Quickly moving on to Gulf Oil, you had revenue which was up just about 5% year-over-year, but EBITDA which expanded by 23%, leading to a very solid increase in margins, 200 bips of margin increase from that 11.5 to 13.5, and therefore your profit was up by 27% year-over-year. That's coming at just below 80 crore versus the 62 crore number same time last year. Fusion Micro, tough environment with regard to rates, but margins have continued to expand for this one, and therefore that's one big positive coming through for Fusion Micro. Stock has done nothing over the last year, but you're seeing profit which is up 23% year-over-year. The profit number has come in at 126.5 crore versus the 102.5 crore number same time last year, with margin expansion largely is what is aiding the profit. Those are the three key ones. Have a watch on those in trade today.
Absolutely. Thanks so much, Harsh, for getting us those details. Of course, looking forward and talking about earnings that are just around the corner, the ones that are expected today, or rather the one major that is expected today is Britannia. It's going to post its results for the third quarter. And according to Bloomberg estimates, the company will see another soft quarter. I think that's more or less been a trend across FMCG companies this time around. Sessa is joining in with more details. Sessa, what are the key numbers to focus on here?
Right, it's, like you said, it's going to be another quarter of soft top-line growth as the company laps a high base, given that the pricing continues to anniversarize. Now, on a year-on-year basis, Britannia's revenue is expected to grow 2.4% at 4,296 crore, according to Bloomberg estimates, and net profit is seen down 41%. Now, it is important to note here that the steep decline in net profit is due to a one-time gain in the base quarter. If we look at the Q3 FY23 numbers, Britannia gained around 356 crore from the JV agreement with Francis Belsa Group for the cheese business. Now, as far as the operating performance is concerned, EBITDA is expected to be flat, while margin is seen to contract at 18.9% versus 19.5% a year ago. Higher advertising spends is expected to dent the EBITDA margin. However, since there is no major risk on the commodity front, gross margin is expected to improve. Now, the company has also taken price cuts through grammage reduction in some categories, and that is expected to drive volumes in the rural markets. However, competition from regional players remains high, and that would keep a check that would keep volumes under check. Volumes are estimated to grow at about 1 to 3% in Q3.
Right.
Now, the key management commentary to watch out for would be demand outlook, update on the core business segment, and also the progress on the cheese portfolio, raw material price trajectory for the pricing actions, as well as competitive intensity.
All right. Thanks so much, Sessa, for bringing us those details. That brings us to the end of this particular edition of All You Need to Know. Thanks so much for watching. Do stay tuned. Up next is India Market Open.